So we are recording. Good morning, everyone. My name is Andy Reed. I'm a director at Propelx, and I'll be hosting today's webinar. We have on the call with us Mark Zhu, Rich Pardo, and Eli Goldstein. Rich, I hope I pronounced your last name properly. Yep. And we're going to go through, I'll read a quick disclaimer, and then Mark is going to give an introduction, and we'll have a chance for each of the panelists to introduce themselves as well. For those of you who are dialing in, there's a Q&A box at the bottom of your screen. Please use that box to ask any questions that you may have. I'll be reading the questions to the panelists throughout the presentation. So I'll do my best to answer as many of them as I possibly can. I'm going to go ahead and just read a disclaimer off of my phone because I think it's a good thing to do. So please bear with me as I get that queued up. All right. So good morning, everyone. Welcome to today's webinar. We're discussing clean tech. The webinar will be an hour long, and as I said, there's a Q&A button. The slides, we will make some of the slides available. I think we'll have to screen some of the slides afterwards and run it by the panelists. But generally, our slides, which are very high level, we can distribute those afterwards. There'll also be a recording of this webinar that will be made available both by email and posted on our webinar. So thank you for the first question. I want to introduce first Propelx. So Mark and I both work for Propelx. We're a deep tech investing platform. We're focused on early stage deep tech investments. And for the last 5 years, we've participated in over $25 million through 70 rounds of financing in early deep tech companies ranging from healthcare to clean tech and kind of everything in between. Whether you're an investor or an entrepreneur, I want to encourage you to take a moment to go over to www.propelx.com and join. It's free. If you're an accredited investor, it's a great opportunity to get access to a lot of really interesting companies. A little bit of context on today's presentation. During the pandemic, in-person events have become impractical, and so we thought this was a good opportunity to bring together investors, startups, participants in the community, and have a deeper conversation about a pressing topic. The disclaimer is this is for informational purposes only. This is not an offer to buy or sell any securities, and I hope that's clear to everybody. So with that, I'll go ahead and pass it off to Mark. Mark is a director of Propelx. He also runs the Newton Fund, which is the deep tech early stage venture fund, and he'll be hosting today's call. Mark, take it away.
Thank you, Andy. I'm very excited to be here, and thank you all for joining us today. I believe we have over 150 people registered for this event, so it is very exciting for all of us to have the large audience for our first event. I'd like to thank Andy, Supplier, and the rest of the Propelx team for all their hard work to get us this far. Joining us on the panel today, we have Richard Pardo and Eli Goldstein, and we're really grateful for them to take their valuable time from their busy schedule to joining us today. So first, Richard from Chevron Technology Ventures. Can you, Richard, introduce yourself and Chevron Technology Venture?
Certainly. My name is, good morning, everybody. My name is Richard Pardo. I'm a venture executive with Chevron Technology Ventures, which is the venture capital arm of Chevron, the international oil company. Chevron has been involved in the venture capital world since about 1999. I've been with the group since 2006. I'm a chemical engineer by training. Actually, out of college, went and worked in a startup for about 5 years. The startup didn't start up. I think it's a common experience, a lot of startups experience, so went to something a little bit more stable. Have had a variety of careers within Chevron before, like I said, about 2006, joining the venture capital team. And our mission is really to scout for innovative technologies that will add or bring value to the energy industry and to Chevron as well. Back to you, Mark.
Great. Thank you, Rich. And Eli, please introduce Skycool and yourself. Here's a slide on Skycool. Go ahead.
Great. Thank you, Mark and Andy, for arranging this. Skycool is commercializing a cooling panel and film that can save energy from air conditioning and refrigeration systems. And our panels, which you can see in this photo, will save about 2 times the energy generated by a solar panel given the same area when connected to refrigeration loads that are running day and night. And these can be in cooling systems that are in data centers as well. The core technology in our panel is an optical film or coating that can stay cooler than the ambient air temperature even when it's under direct sunlight. And we're now working with a big thin film company to manufacture it and scale it up. But the key concept doesn't need any energy input or water input for the cooling. We're focusing now on our beachhead segment, which is supermarkets, and using this technology to reduce energy use in those buildings. Skycool was founded in 2016, and we've raised a seed round roughly 16 months ago, and have been very fortunate to be the recipient of over $4 million of non-dilutive funding. And we're focused on cooling, and we're passionate about that industry because it's really been pretty stagnant over the last 30 to 40 years, and we have a very exciting technology that we hope to create some disruption with. Thank you.
Thank you, Eli. In the next few slides, I'm just gonna kind of set the stage for today's discussion. A lot of information may not be new for our audience, but I think it will be helpful to look at why we're excited with the Cleantech investment opportunity, what has happened in the Cleantech investment space in the past 20 years or so, and how we may move forward. So many of us interested in Cleantech investment because we believe the effect of climate change can be severe and very disruptive, ranging from wildfire to drought to more severe tropical storms and so on. And not to even mention the polar ice cap melt and rising sea level and so on. For me, resource efficiency is something we have to pay attention to in this globe of 7.8 billion people. I choose to use this picture to demonstrate a point. So this is a graveyard of bikes from bike sharing companies in China. Just a little bit before this start of the session, some of the panelists mentioned that we can also see shared scooter graveyard here in the US. So this is really reminds us how sometimes valuable resources are being wasted actually by companies that working in an area that is providing or try to provide a sustainable solution, right? So it's actually a very powerful reminder. Somebody is paying for those, even those bikes might be recycled. It is a terrible waste. And it actually, I think in a lot of cases, the investors are paying for those bikes. So it's helpful to look at over the past 20 years, there is a boom bust cycle, and everybody, a lot of people are aware of it in the investment space. There's a lot of details in those numbers. I do not want to get into too much of the detail, but basically we see almost a 10 times increase in Cleantech investment from early 2000 to 2005 range. And you afterwards, after 2010, you see a sharp drop, particularly in the early stage investment side. And a lot of the Cleantech company unfortunately couldn't make through that cycle. On the other hand, the investor return in the sector has been really not so great. So basically, this figure here shows the total value, which is the return capital plus the residual value on the book of those investments is barely positive. And however, despite the investment performance has been less than desirable, we do have to recognize the technology coming out of those companies have made a significant impact in the industry, and those are very large industries. So this figure here shows the US PV installation have basically grown 18 times from early 2010 to 2022. And Combined, the other way looking at it is that solar installation right now represent about 40% of the new generation capacities. And together with wind, it represents about 58% of new electric generation capacity. So that is very, very significant. Basically means most of the new generation capacity in the US are renewable at this point. The other sector that is very significant, actually emitter of greenhouse gas is transportation. So EV growth has been also very impressive, from about 17,000 in 2011 to over 300,000 in recent years. However, we also need to recognize the total passenger car sales in the US is about 4.7 million. And so although the EV sales has grown quite a bit, it still represent less than 10% of EV vehicle sales. The largest contributor in this case is Tesla Model 3. And so no surprise, the Tesla is probably the most successful, I would say, clean tech investment in the history so far. So with that, I would say what we need to recognize is that the technology innovation has played a very significant role transitioning our economy to a cleaner future. And therefore, we believe going forward, clean tech investments still represent significant opportunities for investors. And the rest of the panel, we will discuss how we can learn from the past and how we may do differently going forward. And with that, we will go into our first topic. And I would like to invite Rich to discuss a bit about what he's seeing in terms of emerging investment opportunities in the clean tech space.
Certainly. Thanks, Mark, for that great sort of overview. And I think it sort of addresses, and I'm going to talk at rather than going into specific technologies, I think I want to address one of the challenges I think we face when the world wants to transform how it does its business. And that's just the matter of scale, right? Trying to do things at a large scale economically and going forward. So there's I think our view, and when we look at what are we trying to invest in, I think there's room for a lot of different technologies to go forward. There's not going to be one single bullet, invest in this and it solves all of the world problems. It's going to require partnerships and it's going to require collaborations moving forward with that. I mean, your electric car example for that is, it's only 10% of the cars sold in each year, but even sales in a single year represents, a low fraction of the total number of cars that are available on the market. So just the changeover from internal combustion engine to electric car, variety of different opinions on how quickly that's going to happen, whether it's going to be linear, sigmoid, or something like that. There's a challenge involved with that. And just to go back, Chevron's been looking at alternative fuels for some time. We actually had hydrogen fueling stations to explore the hydrogen economy about 10 years ago. We're looking at biofuels. So there is a lot of potential and opportunity, a lot of good technology that is coming out, but what we really need to do and spend, I think, some of our investment thesis on is how do we take it out of the lab? How do we take it out of the small scale pilot and start making it more commercial and larger going forward? So that's where I'm going to sort of start with that. In terms of areas of interest, of course, we're all trying to reduce sort of carbon intensity, carbon footprint, looking at the electrification as well as the intersection between those two going forward in realms like that. I'm going to sort of just leave it open-ended there, Mark, and if you want to ask a clarifying question to drive us into a certain point, happy to sort of respond that way to it.
Yeah, sure. So I would add probably, you're right. I mean, I think a lot of those, we're looking at a very big problem, right? Transitioning from a traditional energy infrastructure going forward. And can you maybe just talk a little bit in terms of how you see the role of technology innovation and available of investment capital?
Certainly. I mean,
of those two factors plays in it, and then now I think of it, the other significant factor is probably regulation, right? So public policy. So maybe at a high level, you can just talk about those key factors, how they impact the investment thesis going forward.
Yeah, no, I mean, and that goes back in '99 when Chevron actually started its venture capital group. Why we wanted to do that, which was, obviously large corporations have their own R&D departments to do some research. Universities have their research. There's a lot of joint industry projects trying to do advancement, but there's also a lot of very smart people in small startups trying to innovate their ideas and their technology as well. And that's why we started the venture capital group, was to try to access these ideas that are out there and forming up. Now, obviously, different investors are going to get involved at different stages of the development cycle. There's a lot of seed investors, deep tech type investments, like the Opportunities Propel X offers, which I think try to intersect ideas at a little bit more of the nascent idea, trying to develop that, trying to bring it to a little bit larger pilot scale, a more working prototype scale. And then there's realms where larger corporate venture capital groups could probably get involved, which is starting to move into selling to more customers, trying to go worldwide and things like that. In our model, we've got a couple of funds that we try to use. We've got a future energy fund that is looking at, what is the future of energy? It's focused on decarbonization investments. It's looking at the types of electrification investments, where we're looking at charging stations. We're looking at novel battery technologies. We're looking at autonomous vehicles. All sorts of aspects as to what might be changing as the world goes forward on its clean tech. But we're also trying to improve our operations around our core operations as well too, with reducing carbon intensity of the energy we are extracting out of the ground right now, and realizing that there is a general shift to lower and lower carbon intensity going forward.
Great, thank you, Richard. So now I turn over to Eli. Eli, before you started Skycool Systems, you were working towards a PhD degree at Stanford. So I think you're very well connected with the academic world and innovation side of energy technology. So can you share with us some of the exciting ideas you think the researchers are working on that will have a significant impact going forward?
Yeah, absolutely. So yeah, I would say being a couple years out of Stanford and my PhD, I looked towards the national labs and certain research institutions to see what are the hot areas of development. But there are some programs like Cyclotron Road up in Berkeley, which have lots of companies that are focused on more hard tech research, and they're looking at ways of converting CO2 direct to chemicals or new ways of cooling, coming up with new structures to make it easier to capture CO2 from the exhaust of power plants. When I was doing my PhD, I was really focused and interested on utilizing the vast fossil fuel resources that we had in the U.S. to reduce CO2 emissions from those. And so I think there is a lot of interesting research still going on in those applications, and those could be in terms of, again, structures to remove CO2 from air, or ways of burning fuel in ways that don't result in just CO2 mixed with nitrogen in combustion streams. And then right now my background is mostly in cooling, and so there's also a lot of interesting aspects there to reduce energy use for cooling, but also novel ways of cooling systems, and those could involve using desiccants to extract moisture from air, and then using moisture to rehumidify it and cool it, as well as novel types of compressors and things like that. So,
great, thank you, Eli.
Yeah.
So let's just given that we have limited time, I want to cover all the topics we like to discuss. We can always go back to some earlier topics as our audience asks more questions. So let's see. So the next one is that when we're looking at new investment opportunities, I actually think there's a lot of innovations, a lot of entrepreneurs are starting commercializing those technologies. And so from investors' perspective, it is important to kind of have a systematic approach to evaluate those opportunities. So as Rich just mentioned, he has actually spent quite a bit of time in the venture space. So I'd like Richard to probably share some of his approach to evaluate investment opportunities, some of the key risk areas that he always pays close attention to.
Yeah, no, I'll be happy to. And I think, I'm glad Eli mentioned Cyclotron Road, or Activate as it's now known. I mean, I think that's a great hard tech model that has worked well at Berkeley. And I know they're trying to expand out to Boston area as well as other areas. And, what I like about that is they're allowing their cohorts to actually spend a couple of years validating the technology rather than being more worried about running or organizing a company, because we've got to get the technology to work first, and then once it works, let's put a company around it and how do we bring it to market. I think it's fair to say that as an investor, I'm probably looking at a little bit later stage on the technology, but I really want to support the startup culture that helps the early ideas work as well too, with engagements, with being able to participate in events like this to make sure that if there's a pipeline of opportunity, that the front end of the pipeline doesn't dry up, because if no one's feeding the hopper at the front end, there's not going to be a technology for larger industrial or the rest of the world to utilize. So we really need to do what we can to sort of support that. So when I look at a startup and I'm trying to make an investment decision, I mean, there's the obvious things about, what does the technology pass the sniff test? I think that's very easy to try to evaluate. But I think you have to take a look at, how well do they intersect their market? Do they understand the adoption? Do they understand the scale? Can we avoid, and I'm going to go right back to Mark's picture, can we avoid a pile of wasted bikes sitting behind the business because they, for whatever reason, they misjudge the adoption rate, the speed of adoption, or the demand for that? Are the customers that a Cleantech is working with truly those leading edge customers who are willing to sort of work through, a beta type product, and maybe it'll have a bit of a recycle. It's not perfect. It's a bit like the crossing the chasm theory, where you're going to have your early adopters, and then there's a gap before you sort of get the sort of, there's leading edge adopters and your early adopters, but you're still going to have industries that are, still waiting for it to be, everyone else has got to adopt the technology before they will. So there's a variety of customers out there. Is there a plan to engage and get that technology out through that entire stage of what the adoption is? I mean, right. It's great when you've got one company that's eager to do it, but who's customer 10, who's customer 100? And can you as a startup also scale up to support these, the demand from all of those customers, as well as perhaps working on a more international level or a more national level, rather than just in, let's say, the local area where you started with right now?
Thank you, Richard. I think you made a great point. Initially, I think the technology risk is something that definitely needs to be resolved, and you suggest leveraging some of the resources like partnership with national labs and accelerators, like Cyclotron Road, right? And then I think you also mentioned the product market fit is very important, and make sure it actually have the ability to scale. So as a Propel X, we're mostly a early stage investor at the C stage. Mm-hmm. I want to have a follow-on question, Richard, in terms of for us, some of the a key risk is actually financing risk, right? The ability for company from C stage be able to continue raise capital that's required to grow. Can you comment on, from your vantage point as a later stage investor, kind of the milestone you're looking for a company come to you?
Yeah, no, I mean, obviously the ability to attract to continue to attract external funding, I think is a key sign on a startup. And, I want to avoid, to be a little bit blunt, the initial investors are drinking the Kool-Aid and raising the valuation and self-funding the idea without really having that market validation going forward. There are a lot of competing technologies out there. It is a very crowded field. There is competition, and it is just a fact of the business that we're in that, there are, it's going to be competitive, and companies are going to drop by the wayside. But I'm still of the opinion, and we've seen that with the superior technology doesn't always win. And let's go back to the, I'm old enough, and maybe other people on the phone aren't, to remember when it was VHS versus Beta. Beta was the superior technology, yet it was VHS as a format that got adapted. Even when we went to Blu-ray, there were competing technologies, and not the best technology doesn't always win. The most commercially viable, or the one that can sell the most, sometimes is the one that wins. It may not be 100% of the solution. It may be only 80%, but that's good enough sometimes. So I think it's a fact of life. But obviously, the ability to continue to attract money makes a company more attractive for us to continue that growth effort going forward. So that, I mean, that's certainly that's certainly one of the judgment points that we would like to look at. Other things are, the management team, their experience. Have they had experience with startups before? Now, I realize that that's a bit of a cross swords. Somebody, there are first-time people out there who will do well. We need to be able to support them as well. But if someone has had a track record of bringing ideas to market, they get a few extra points for that in terms of the innovation.
Great. Yeah, so Eli, with Skycool, I think in the past few years, you guys have spent a lot of time to validate the technology and finding partners to demonstrate the viability of the technology and the value proposition. So you are actually actively addressing some of those key milestones Rich just mentioned. So can you share a little bit more what you guys have been doing in the past few years in terms of getting the Skycool system ready for commercial deployment?
Yeah, absolutely. So we started out with a very early stage technology that really no one was familiar with, and so we had to get our names out there, and that happened through publications in prestigious journals like Nature, doing tests initially on the roof at Stanford, and then really focusing on a plan to do bigger and bigger deployments where we could demonstrate the value at first in more research and R&D settings, and I think touching on Cyclotron Road and the other incubators there like that that provide that platform are very valuable. We were able to do it with support from RPE and other grants, and then from there, once we got the confidence in the technology and we're able to prove that out, we would went to bigger scales, and so we're able to talk to customers and test our value proposition and get feedback from them. And so then it was doing things in convenience stores and smaller refrigeration systems, and then once we were able to prove out success there, we were able to graduate to even bigger deployments and attract partners to help think about scaling. And I think a big challenge as a startup is how do you go from doing 1 or 2 deployments to doing thousands or tens of thousands, and I think having a credible plan and having the right resources and advisors to execute on that plan are really key things to be able to communicate to investors, but also need to be discussions that happen in boardrooms in startups and then among founders and in the founding teams. So.
Great, Eli. I think we can move to the next topic, and I think that this Eli, you can take that one as well. So early stage Cleantech startup particularly, raising funding has not been easy, right? And but I think fortunately in this sector particularly, over the past 10-15 years, there's a great ecosystem for support network whether it's funded from DOE or other philanthropical organization, there are non-dilutive funding resources that's available. And Skycool is a great example. So Eli, can you also share a little bit in terms of what you guys have been doing in partnership with those funding sources to move the project forward?
Yeah, absolutely. I would say non-dilutive funding has been really key to a lot of our core development and core research. And we've been trying to use the private capital that we've deployed to really grow the business. But we've been fortunate to be the recipient of grants from the National Science Foundation, RPE, which is from the Department of Energy, as well as some state grants through the California Energy Commission and organizations like New Energy Nexus. But yeah, I would say I would encourage all entrepreneurs out there in the climate tech space to really look at those opportunities and make sure that if there are applications out there that they align with the corporate goals and milestones that you are setting out for for fundraising and for investing. And we've been able to do that very successfully. So I think a good example of that was a California Energy Commission bridge grant, which was really focused about supporting research out of labs and helping them get into commercial applications. And so we're working right now with Whole Foods and the CSUM system, so the Cal State system, to deploy our technology in a supermarket in one of their classroom buildings. But really, the goal is to get validated data with a third party to measure the savings, and then we'll write a report, white paper, and be able to publish that, and then use that to go to other supermarkets and other commercial building operators to expand and hopefully scale the technology into other businesses. But yeah, I think there are lots of innovation clusters and hubs and folks that want to provide more than just capital, but they want to provide proving grounds. And so I think NYSERDA in New York and Cal Testbed in California really have done a good job at setting the stage for those resources for startups and small companies.
Great, thank you, Eli. I just want to also highlight Skycool is based in California. So they work very closely with the partners in California ecosystem, but there are other resources that's available on the East Coast in New York and Massachusetts. So it is like Eli mentioned, not just only bring the financing to the company, there's also valuable partnership can be established through that process, and that's important in terms of providing that a later stage investor like Rich is looking for. And I will add, as an early stage investor, for example, as NSF, SBIR grant companies, and has been, as well as ABA-E, those type of winners has been represent significant part of the pipeline that Propel X has been seeing. And from a technical risk mitigation point of view, we find it's actually very valuable company going through a very rigorous selection process like NSF and ABA-E, and come out to be a winner. And that's just a great testament to their technical capability and actually help us to form our investment opinion much easier. So Eli, you want to add anything, or?
Well, I was also going to say that, yeah, grants, I mean, they do take a lot of time, and it is important to make sure that they are aligned with your goals and milestones. So just be aware of what those are going into these things.
Good point. All right, so we'll move to the next topic, which is the role of corporate venture investors, and we're glad that Rich can join us representing a corporate venture group that has been there for 20 years, right? Which is actually not very common for corporate venture group. I have been with two corporate venture groups prior. One lasts 6 years, and another one lasts about a year. So, so that is kind of just a couple of data points. But in a sector like a clean tech and energy space, right? We increasingly see that corporate venture playing a larger role, and especially for later stage companies when they need a scale and the network to make a larger impact. So I would love to have Eli to tell us a little bit more about Chevron Technology Venture particularly, and other, Rich also mentioned the technology future fund, right? So those organizations, how it might be how they work differently with startup, and just in general how he sees the role of corporate venture investors in the clean tech space. Richard.
Okay. Roles of corporate venture investors. I mean, obviously, the financial returns are important to us. We're doing a venture game here. We want to put the money in. We want to see a great exit down the road. But the other aspect of what we're looking for is the technology something of value to the corporation? And I think the way I like to sort of put it into my elevator pitch is, I'm trying to find tomorrow's suppliers today. For what is the corporation going to be using, what is the corporation going to be having as part of its business going forward. We're not an acquisitive investor. By that I mean we're not looking to acquire the companies that we get involved in. We're trying to make it a win-win. And as a result of that, we don't want to put in, or we find it's not good practice to put in exclusivity. You have to deal with Chevron and we'll cut out the rest of the energy industry for you. No, we want the startups that we get involved with to have a broad range of available and addressing their markets going forward. Even though we are a Houston-based, we are an international company, and we do have investments sort of around the world, and we're just we're scouting and looking for these sorts of things. So what do we bring as part of our investment? Now, one of the things that I want to be very clear is when I engage in a startup is, when I invest in you, I bring in investment dollars, and we will get some information rights. We'll want to sit in the boardroom. We'll want to understand it. We are not bringing a guarantee of a commercial relationship with the corporation. You are still going to have to sell to the corporation in an open competition with your competitors and win on your own merits. You're not going to get any, you'll get an introduction because you're a part of the portfolio, but you're not going to get any preferential treatment because you are part of the portfolio. And part of that is I want to keep a very strong arm's length between a financial investment, which is looking at one set of data and has one view of the company, and a commercial relationship. Chevron's a large organization, and we can easily have arm's length type relationships which don't contaminate each other or have any appearance of impropriety or anything that people may get concerned with. But we can bring access perhaps to some experts to understanding what the market is, how is it like to sell to an enterprise customer, what is it like to sell to a large multinational company, and to help bring that as part of when a clean tech is ready to scale, as Eli said, you've done all the technical stuff, you're ready, now you're ready to go big. We can perhaps provide some advice and some role in that going forward.
Thank you, Rich. And as you mentioned, you're looking for kind of the future supplier to Chevron in some case, right, in those investments. So do you also co-invest with, for example, in those companies with organization like, for example, our current supplier to you, and how do you see those?
Good question. We are very open to, in VC terms, we don't lead the deal. We're part of the syndicate. We're a price taker, not a price maker. We don't want to have a board seat. We don't have any sort of control. So we like to see how the syndicate is being developed. I'm going to say the energy industry is a little bit unique in that a lot of energy projects that are out and around the world tend to be joint ventures between large players. So you will often find, at least in the energy sector, I think co-investment by multiple energy entities. You know, in some of the other industries, let's say automotive, they tend to be much more competitive, where if one automotive investor is in, they don't want any other automotive company being part of the deal. They really want to sort of try to access that. Another aspect that I wanted to mention that I forgot to mention, another role that we sometimes play is in a large corporation. You know, Chevron's got perhaps 70,000 people. How do you get a new technology tested, evaluated, and what's the land and expand look like? Chevron Technology Ventures, the group that I'm with, is about 50 people. That's not 50 people doing investments. There's, you know, only part of us are actually working on active investments. A large part of that team is what we call a technology deployment and adoption team, which is trying to set up these proof of concepts and early field trials to gather those results so that we can do the land. And then when we try to do the expand in the corporation, assuming positive results, those results can be shared with other business verticals so that we don't have to start over at square one again. I know for a lot of startups can be very frustrating, is that you've made a penetration in one division, you then go to division B, and they're like, oh, we have to start from first principles, proof of concept again. And that frankly is a waste of everyone's time. If we can help increase communications and sharing results, you know, it becomes a faster land and expand model. So that goes with also, I think, some of the roles that corporate venture investors can bring.
Okay, great, thank you. So Eli, you mentioned that the Skycool has been working with corporate partners, and you mentioned some of the names as, you know, potential customers. Just to the extent you feel comfortable, can you just talk a little bit more in terms of how those engagement has been working, and in terms of help you like build up your supply chains, as well as you reach to scalability and growth?
Certainly, yeah. I would say with any entity out, you know, that we're working with as a customer, whether it's an investor or a product, you know, someone who's going to take a product on, it's really important to know what their needs are and what they want, and so often that comes with alignment with, you know, business units on the corporate side, and you know, we try to structure those initial relationships with NREs or, you know, JDAs, so non-recurring engineering contracts, or, you know, joint development, and that's really a way to create alignment. I think early on it's really hard to know what the corporate partners want and need, and so I think it's, you know, time is really the most valuable thing to a startup, and so for us it's really about trying to minimize wasted opportunity and wasted time, as Rich was talking about. But we've had relationships where, you know, we've started out with interactions with the business unit and you know, been able to grow those out within the company, and then we've had other interactions where we start with the venture folks from a corporate, and then are able to get connected with business units and really learn about those core problems. But yeah, I really think you know, for us it's been about creating alignment on the business unit side, and then being able to expand you know, from one project, and it's really about getting success stories, so starting with one and then just going from there. But it's, I think, very attractive to try to go, you know, big very quickly, but I think what we've found is that, you know, it's things get diluted, and we don't really have the same resources and time to commit to meetings and conversations as say a corporate partner. So it's really important to start with one and just be focused on the startup side. So.
Yeah, thank you, Eli. I think it's important to point out that working with corporate partners sometimes can, you know, represent a opportunity cost, right, for the startup, and so it is very important that both sides are aligned, and so it's a time and effort well spent for both sides.
Yeah.
And with that, we have about 15 minutes left. So I think we are kind of getting towards the end of our planned discussion. So Cleantech is actually a very broad, or climate tech is a very broad topic, and this is a little bit of experiment for Propel X to put this event. We have an audience that with broad background, different level of experience in this industry. So the last topic is, I just want panelists to suggest some additional, whether it is book or a report or podcast that you may suggest for the audience to dive in a little bit deeper in this area. Rich, you want to go ahead?
Yeah, no, I mean, I've got a couple, and I'm going to answer this sort of generically. I think one, if people are not aware of it, there's a great YouTube channel called Just Have a Think. David Borlase out of the UK comes out every Sunday and talks about something in the clean tech space, looks at a lot of reports, has a lot of links to the information that he uses down below. And I think it's a great way to sort of look at some of the topics. He's just had a recent topic on, for example, small modular nuclear reactors, because there's a lot of buzz about that going on in the industry. Has a great summary on fusion, has a great summary on liquid air type of batteries. What does that mean? So it may be, I think it's a good introductory talk on a lot of things, but it may be a good way to sort of explore the sort of the breadth of the challenges that are ahead of us. That's option number one. I think the second thing I like to remain, and this is going to, I think your Mark's comment about something being related, a great book that I read, and I think one that really tries to address the interconnectivity on a lot of stuff, is the book Donut Economics by Keith Raworth, which is really trying to talk about operating our economic theories in sort of this Goldilocks zone of we're resource constrained. What does the whole world really look like, and how do we keep things in balance and trying to work with that? I think it's a very, it's a very good read. It's a quick read as a book, but I think it sort of gets you thinking around, how do we keep things in balance? And, we want to have enough, but not too much of a lot of things, and try to keep that balance for sustainability in all dimensions, not just energy, but just quality of life, social justice, and a whole bunch of things that matter so much to the world.
Eli, you want to?
Yeah. Absolutely. I would say there are a lot of great series and resources. We work a lot with a California entity or international entity known as New Energy Nexus. They have a lot of great resources on their website for startups focused on climate tech. There's an organization called Powerhouse that puts on podcasts called What It Takes. They interview founders and really interesting folks in again, the climate tech space, which I would definitely highly recommend to learn about stories. I think there's Bigger Vision podcast, on NPR, like How I Built This, which I always find interesting to learn more about, scaling of non-climate tech companies, but it's always interesting to learn about the details there. And I would also encourage, early entrepreneurs to look towards accelerators and like StartX or YC, and they have enormous amounts of resources that they have, just from the history of other entrepreneurs that have gone through those programs, and I think being able to tap into those types of networks. Lacey is another example. Those can be great resources for founders.
Great, thank you, Eli. So we have about 10 minutes left. I will turn it over to Andy, who has been collecting questions. And so, Andy?
Yeah, thank you. And so everyone on the call, we will also distribute a list of those. I'd also like to plug the Energy Gang, which is a good podcast. And there's a number of other books and resources. So we'll put together a list and include that in the email that we'll send out after this. There are a number of questions. What It Takes, getting some thumbs up from the crowd, Eli.
Great.
Yeah, so I think this is a good one because it's just kind of general. Can you guys talk about the difference between corporate venture accelerators and corporate venture investors and accelerators focusing on hard tech? So a little bit of just like landscape orientation. What role, kind of briefly, do accelerators and incubators play? And then, I think similarly, what role do kind of national labs play? And then can we just walk through like what that startup journey is in terms of the support network from incubation to potential exit? And Eli, I think since you're kind of closer to the ground, maybe you can start with that. And then Rich, you can kind of follow up and just talk about, all right, well, this is a commercially viable startup. Where do they go from, how do they get from, let's say, 20 million to 200 million?
Yeah, certainly. So I would say, our story was very much, we're first-time founders. Academics came out of Stanford, and we were able to look at the resources that were around us in the Silicon Valley. Mainly StartX and some of the incubators that we were a part of to learn from peers. It's a very complicated ecosystem when you first start out, and I think having as many conversations and asking as many questions as possible are very valuable. But I would say accelerators provide a vast amount of resources in terms of setting up a corporate structure, so working with law firms, thinking about IP, knowing how to create a business plan and who to speak to validate a technology. But I think you can certainly learn those from books, but I think it's also very valuable to have one-on-one conversations with people that can have experienced a lot of these things before. I think fundraising can be extremely challenging if you've never done it before, and I think there really is a process to it, and you have to stick to that process to be successful. But I think again, learning how to do that through conversations is certainly easier, and then I think accelerators and incubators have those resources and that sort of accumulated experience that you can tap into as an early founder.
Great, thank you. And so, Rich, as you're seeing companies that are, kind of like walking on their own feet, what does the journey look like from, let's say, like a regional scale to a national scale? What does that path look like?
Yeah, no, I mean, I think that's just sort of go on what Eli says is, how I would see an incubator is it's a good effort of shared resources to try to get things up and going. And I think it's almost a distillation of talent and ideas as well, too. And then the company wants to sort of go out and, stand on its own 2 feet. It's running more independently. When I want to do an investment, I'm actually looking to sort of a self-standing C Corp type of a company. It's got a board that can fire its CEO. It's not what I'm going to call an owner-operator type of a company. It's really trying to be out there, but it's going to be faced with challenges for how does it scale, how does it grow, and has it attracted enough, advisors and experts around it, both as from the investors that are in it, which can provide these resources, as well as the networks that it's built as it going forward. And it's funny that you mentioned that question, because that's sometimes a question I ask CEOs when I'm doing the due diligence. Is that here you are at $1 million in revenue, just jump forward to the future, you're 100 million in revenue. What does the company look like? And just to sort of test, does the CEO really have that vision and understand what it means to run a company that large going forward? Or is it going to be, I'm on a rocket, it's flying faster than I can control, and we don't really know where we're going? I mean, I'm sort of making a little bit of fun of that, but there is, sometimes lucky wins, but I'd rather have somebody who's got a good skills, who's got good vision, and can be part of that journey to sort of land and expand, take the money, become cash flow positive, selling what you've got. Don't let perfect stand in the way of good enough. And then you start plowing the money back into the company, your profits back in, and start growing and starting to hit, your milestones and your plans. I mean, one of the key things I hear often again is have a plan, hit the plan, and then people will actually listen to you. If you are always explaining why you're not hitting plan, it's a harder sell to attract investors in that regard.
Yeah, absolutely. One of the questions I have as a follow-up is around technology development in clean tech for, let's say, more mature companies. So I think we discussed kind of the early company landscape, but my understanding is that even mature companies can get some grant funding, for example, to fund new technology. So let's say moving from one market application, they have to redevelop their technology to move to another. Is that something that you see later in the pipeline? I mean, what is the kind of, I know you're not a policymaker, but with the companies that you work with, can you talk about how that relationship changes with government?
I mean, I always, if there's, I want to call it free money. If there's grant money out there, it's certainly worth the effort to try and go ahead and get that, especially. And there are certainly certain countries that are much more involved with development funds at all stages of a company's life going forward. So if you can get access to some of that funding, by all means, go ahead and do that, regardless of what that is. But one of the things, a company has to be able to be profitable in any environment. So if you are very reliant on subsidies of some form, and we don't need to discuss where those subsidies are from, whether they're private, whether they're public, and those subsidies can disappear at the sign of a pen, you better have a plan for what are you going to do when those subsidies disappear, because I think it's not a question of if, it's probably a question of when, because it's very, don't count on that for everything going forward. So that's part of the rigor that you have. If you can be profitable without the subsidies just add to what you're making, but you can still survive when some of the things you're counting on that are key to the plan. And that's part of going back to a very early question, how do you manage the risks of some of the things going forward, is understanding how the market dynamics can change and what does future planning look like in that regard.
Got it. So we do have about 4 minutes left, which basically signals the end of this conversation. I wanted to end on kind of like a more upbeat note, because I think we're all, enduring a lot of challenges right now. And a lot of what we're talking about is kind of heavy. So, each of you, Mark, Rich, and Eli, I would like to ask, just for a 1 minute note on something that you're excited about, either that you're working on now or that is coming down the pipeline. What is something that kind of gives you energy and gets you excited about, the world that we live in and the world that we can live in? So Eli, I'll start with you just because you're on the right side of my screen.
Sure. Yeah, I think for us, we're really excited about 2021. That's going to be a big year for us where we start to scale up our operations. We've done a number of supermarket pilots this year, and I think got a really compelling data set and it's validated with customers. And so, next year is really about expanding our footprint and I think we've got a technology that we feel confident about. And now it's about growth and really testing that framework in the 40,000 supermarkets that exist in North America or in the United States.
Awesome. That's awesome. Thank you. Rich, if things that you're looking forward to?
Yeah, no, I'm going to go right on. I think what Eli just said is exactly what, something that I'm excited about is we've all had this current crisis, COVID, whatever you want to call it, hit us hard. The world has sort of reeled, the American economy has sort of reeled, but you can look at the energy that we're hearing about. Hey, we're still growing as a company. We're still doing it. We're getting it done. We're rolling up our sleeves. I'm going to toot my own horn here. We're still investing. We're eagerly investing. I've got, we just closed a deal a couple of weeks ago. It's unannounced yet. I'd love to be able to share it with you, but news on that's going to come out later. And we're actually looking to actively invest still in this market. We see that, change is needed, innovation is needed going forward. Now is not the time to take our foot off the gas and trying to drive innovation going forward and for change.
Yeah,
we want to be ahead of the curve, not behind it.
And Mark, you get the honor of wrapping up the panel discussion today. Just what are you looking forward to in the kind of current moment and the moment ahead?
Yes. So from Propel X team, I think our unique online investment platform model has actually, I think, benefited from the current environment, that given that having in-person meeting, it will be harder. So our online model is a good fit, and we see a stronger deal pipeline than ever. It's also exciting to see company working on technologies that is directly combating COVID that coming to us, and I'm just overall very excited to see deep tech companies making a real difference in the world. With that, I also like again thank Rich and Eli to joining us. Your insight is extremely valuable, and thank you everybody for joining us.
Great, and that brings us to the hour. So thank you again, Rich, Eli, thank you, Mark, for hosting this. And I also want to thank everyone who dialed in today. We will be sending out a copy of this video. We'll also send out a list of resources, and we can keep the conversation going. So as Mark said, I think that we are in a unique moment. And as Rich said, it's a good time to roll up the sleeves. And as Eli said, there's a lot of exciting stuff happening this year and the kind of year ahead. So we'll be looking to connect with you all and keep this conversation going. Thank you, everyone. Be safe and have a wonderful day.
Thanks.
Thank you.
Yeah, thank you. Bye.
All right.